Hello. I wanted to get on and talk about what was breaking news on yesterday. Yesterday, the Federal Reserve basically released that interest rates will be hiking up to three-fourths of a point, which is approximately 0.75%. Now, that might not be a lot to you. I don't want to ruffle any feathers on this issue because we are already facing the insurance companies who basically have pulled out, who basically are not renewing who are not insuring us. Basically, I'm one of them who has lost their homeowners insurance. But anyway, we're not going to discuss that right now or at this time. I had a few calls from people that were asking me, Tanya, is it a good time to buy? Tanya, is it a good time to sell? You may not like what I'm about to say, but I wanted to get on from my perspective of what I think. So therefore, once again, earlier today, the feds, basically have stated that there will be a rise in interest rates. There will be a rise in interest rates. This shouldn't be something that we didn't know that was coming, because it was coming. It's going to affect people in certain situations of their lives. Whether that's good or bad, I don't know. But for me right now, credit cards is bad. It's gonna be an issue for me. If you haven't checked your credit card statements, you may want to take notice. Just within the last month, I noticed that my minimum payment had changed from $25 to like $60. I was like, what? But what it normally would be, like I said, was $25. But once again, we go on with our everyday lives and we don't think nothing of anything. We just basically just move. So I saw it, but like I said, we just move. But let me get back on track on answering the two questions that were asked by my callers. Earlier on the news, it gave an example, so I'm going to still give that example because it was already brought up. But if you purchased a home at $200,000, you have a 30-year conventional mortgage loan, you were required to put 10% down, which your down payment was $20,000. In January, at 3.6%, your house note was $1,168. In June of this year, 6.25%, it's $1,400. So if you want to sell, there may not be a 5 to 20 offers on your home. Your home may or may not be off the market within 10 minutes of being listed like now. Maybe a week. I don't know. But things are changing, and it's going to be changing. It's going to be changing on how soon your house sells, how long your house is going to be on the market, but it's nothing to be scared about. If you want to buy, this is for the question, if you want to buy, your loan may be at a higher interest rate instead of the 3.6% that you were used to in January. Therefore, what you would have paid monthly in January up until now maybe will be an extra $300 or so. I don't know because I'm not a lender, but it doesn't take a rocket scientist to figure the math out. You will have that advantage again for concessions, basically asking for closing costs. That's what's on the buyer's end. Lastly, affected right now are your interest rates on credit cards rising, your rates on auto loans, your home equity line of credit, all of those loans. I mean, everything's rising. Maybe it may be more difficult for you to borrow. Higher loan to value. We already see our gas prices, the groceries in the store. I can go on and on and on and on. But anyway, what I just said, my opinion, what I'm saying is based on the data, it's based on resources. Basically, how I feel that it's going to level off at some point as it relates to the real estate market. Everything is going to just level off. So make good choices with your dollars. Be on alert. Don't be quick to move.